Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the podcast, host Craig Jeffery meets up with Steve Bullock, VP of Sales at Kyriba, to discuss trends in Treasury. With a focus on financial services and insurance companies, they share valuable insights into these businesses and what other industries can learn from them on both a domestic and global level. Topics of discussion center around technology expectations, data accessibility, software solutions, and more. Listen into the discussion.
Welcome to the Treasury Update podcast. This is Craig Jeffery. I'm the managing partner of Strategic Treasurer. Today's topic is trends in Treasury. I'm here with Steve Bullock. He's the VP of Sales at Kyriba. And as many of you probably know, Kyriba is one of the most widely used treasury management systems in the world. They have over 2,000 organizations using their cloud platform for the TMS. I want to welcome you to the Treasury Update podcast, Steve.
Thank you.
A subtitle for this section is What Can Financial Service Companies and Insurance Companies Teach Us About Treasury in Other Industries? There's some unique things about insurance companies, areas of intensity that is quite useful. So most of our focus on today's episode of the podcast will focus directly on FinServs and insurance companies, but clearly there's significant applications that are useful for other industries. So maybe to begin, Steve, how would you describe these industries? What's unique about them, and what can others learn from these industries?
So in the last few years, we have seen quite a number of very large and medium-sized financial services and insurance businesses, both domestic and global, coming to the market to look for some more robust technology. And I say robust because historically, these two areas of business have done a very, very good job of building platforms very unique to them, in many cases in individual companies, where they had the luxury historically of dedicated development teams and then were able to build quite tailored solutions. However, as we all see the trend towards compliance and regulatory demands and consistency from a number of other areas of business, such as banks, what this is really promoting within both insurance and financial services is more a need to have something more off the shelf, something more available to them that they can plug and play in many instances, and something as the wider software world has developed and offered more straightforward solutions, such as cloud platforms now, which are very, very commonplace, having a single solution to do many jobs that previously they had many solutions providing.
Steve, you mentioned some of the activities, having a large technology staff to support them. And I think you were hinting at, and in a previous conversation, you mentioned how the types of volumes they have, how much activity they have in different areas. So where are these firms most intensive, whether it's in complexity or in volumes or scale? Maybe you can give us a sense of the scale of what a fintech or an insurance company might be looking at from a treasury perspective.
I think I'll sort of focus on the aspect of an insurance business. I think the impact of the type of business they do means by default that they have huge volumes of activity occurring, whether those volumes of activity are occurring at the bank account level, at the bank statement level, at the payments level, for what comes through those banks as a reconciliation perspective. So they demand and expect the ability for platforms to handle the huge volumes that they have. In the case of insurance companies, it may be premium flow, it may be claim flow, money both in and out. And obviously having a robust control around that with a solution that offers that capability for them by default ensures that other companies in other industries then can really leverage what the larger businesses require and actually make it much more streamlined for themselves.
You brought up some good points. Just some insurance companies are dealing with, millions or tens of millions of payments per month. Many organizations don't see that for a decade. Accounts, oftentimes they're in the thousands, sometimes more than 10,000 bank accounts when you look at different types of insurance companies. So really massive, massive scale. Yeah, very interesting. So those obviously present some different challenges than maybe some other organizations have, or on a different scale. I think there's a couple areas. If we continue this discussion about technology, there's certainly a lot in this area of technology that has overlap with other industry verticals and has some unique aspects. You had talked about a lot of homegrown systems. A lot of those were developed because they had their large IT departments, and because systems, multiple decades ago didn't meet their needs. That looks different from some other organizations. So what does technology look like in this space? What's the same and what's different?
What's the same? Basically, at the end of the day, every single business that we deal with and every single business that seeks software, whether it be Treasury or not, is looking for something which is straightforward and easy to use, that offers compliance and regulatory control. Something that, in the case of, for example, payments, is going to ensure that there's inbuilt fraud mitigation and screening, really is going to allow them to evolve into the future without the reliance on in-house teams, without the reliance on ensuring that a product is keeping up with their specific needs, let alone their specific industry. That's a very important aspect from the point of view of clearly what every single business that considers this type of software in the Treasury space today is going to need to rely on.
Interesting. So are we at that time frame where these legacy systems are reaching end of life? They're quite old, and at the same time, capabilities of other systems, whether it's payment related, Treasury related, custody or investment related, have expanded their functionality. Is this a inflection point?
Yes, I think you're probably right. I think that certainly legacy platforms which were built in older code, built in programming languages from many years ago, have done a solid job for the businesses that they have been specifically defined for. But now, as we reach the point where there's expectation for, as I said earlier, plug and play, the ability to work with other platforms seamlessly, for data to be exchanged through more of a common protocol, whether that be bank related or ERP related, then certainly those companies, those software companies that are focused on ensuring for their wider client base and consistent client base that all of those avenues are available to them, means that from an economic perspective, financial services, insurance, and any other company that invest in this type of Treasury software then have the ability to progress because there's a focus around the needs of their specific Treasury business. And therefore, they don't have to worry about themselves keeping up with it because their vendor and their software platform is kept up to date based on the needs of the industry itself.
Tell me if this is in alignment with some of your thinking and what goes on. So you mentioned some of the areas where they're the same, intense payment, investment, custody account type organization like an insurance company versus maybe a manufacturing firm, different scale, maybe a lot of the same type activities. But what differed on the technology front was the insurance companies, that was their business. They had to develop some homegrown systems. Those are reaching end of life. Other organizations, a lot of them have, when they entered the market, they might have been using some of the modern Treasury technology, modern payment technology, and are sitting on new platforms. But as we look at surveys of what people have, there's still a very significant percentage of companies that have, I'll call it legacy market, old installed solutions that are not developing, like some of the cloud-based platforms. Are they experiencing the same type of will need to move off of this legacy technology like the insurance companies and the fin services? And if so, how do those changes differ?
Yeah, most definitely. I think that we're seeing more and more drive towards solutions that are being made ready and able for the requirements of the business practice more quickly than a legacy installed solution. Historically, as anybody aware, having either used that platform or be using that type of install platform, then an upgrade may have taken a period of time. It would have taken an amount of money to actually get you to that next version, and then there would be a period of parallel run with an older version versus a newer platform version, which obviously consumed time, it consumed resources, and it consumed dollars. What we see now, and what is becoming more and more appealing, is the fact that with with a software as a solution, cloud-based platform, the expectation is that there's a seamless upgrade process. It's occurring without any major review. It's more incremental than it is a completely different version that is provided to the user and to the customer. And therefore, the adoption of twice yearly updates is much more straightforward, much more palatable, and causes absolutely no pain.
The industries that we're talking about have a certain intensity in treasury processes and volumes that are obviously different from others. And you spend most of your time, your group is lined up, with these types of firms. This concept of these very intensive firms that are very intensive in different areas, whether it's payments, commodity price volatility, risk, global expansion, number of accounts, types of payments, they can help us with other firms that might not be as intensive, maybe as a early lookout or early warning. Maybe can you give us some perspective on how the demands, from the most treasury intensive areas in one type of industry eventually make their way to the others, and maybe give us some topics that help us understand how that change takes place? I know we spoke about it the other day, but maybe we could have that conversation again.
Yeah, there's two key areas that we're seeing more and more prevalently now, whether it is in the insurance and financial services space or whether it's trickling down to other businesses that certainly have the same risk concerns. They just may not have the same business volume to consider, but at the end of the day, what's being managed and what is being followed is similar and consistent. So many companies have inconsistent processes, sometimes linked to the fact that they've got legacy software and a hodgepodge of different systems. Others have intensive processes that they're following, again, maybe based on legacy software or just manual situations that they have to cater for based on their current environment. But certainly what we're seeing now around the areas of both fraud mitigation is the fact that people want to see and have a right. Not only do they want to manage cash and manage risk and manage payments, for example, the ability to actually get into the process of having a fraud checking occurring before payments move off to the bank, to have payments being screened through OFAC checking or UN sanctions listing in this day and age is becoming very, very important to people because, the same as individuals are tackled day to day now from a fraud perspective. Obviously, the businesses that we work for and other much larger businesses, they also are impacted by fraud opportunity from the outside world every day. So it's vital to these companies that they have something adheres to the processes they want to follow, adheres to the regulations and the compliance out there that their businesses need to follow, and gives them comfort that they're doing everything they possibly can to ensure that they are reducing as much risk that is imposed on their business and their treasury organization at any one time.
Yeah, it does, and it definitely cascades. Certain organizations that have to do it because they're targeted first. They build up better defenses, and then the criminals expand and leverage automation to go after other ones that may not be doing 10 million payments a month. They're doing 10,000 payments a month. It's still the same risk and still the same exposure, and they're going to have to follow in efficiency, fraud mitigation, control perspective, leveraging data or processes. So it's that's a really good example, or two examples that you gave, Steve. I wanted to talk about the technology status. There's a history of firms needing very significant treasury support that formerly they had to build everything, right? There are these in-house homegrown systems that you talked about. What are the implications of this, with a lot of the changes in technology in the market? How is that also having an impact of, working with multiple systems, whether you use single solution or best of breed? No matter what you're doing, you're connecting with lots of external parties and processes. How is that also impacting the discussions you're having or the issues you see in this space, particularly, or in the treasury world in general?
I think the common theme around the point that you're looking to understand, Craig, is that once upon a time, in my opinion, it used to be that people felt that their treasury was very unique and their treasury business related to their overarching company had to have some very specific nuances around it to ensure that they could support their company. As things have become more consistent over time in the way that Treasury is expected to manage itself, and with the compliance needs and with the technology streamlining in the bigger outside world around banks and ERPs, what we're now seeing is people coming away from the needs to have their own defined solution and saying, actually, using a platform that a peer of mine uses or a similar business organization uses is actually going to be much better for me as a best practice perspective, that we're all following a same means and method. And that means historically, where they may have had an intensive IT team around their Treasury operation, historically I've seen maybe up to a dozen people working from an IT perspective with Treasury to ensure connectivity, to ensure file exchange, to resolve any issues related to those two examples. Now, with common platforms offering common interaction and connectivity, it means that then the reliance of connectivity falls to the vendor. The vendor should then be established to provide that support, and therefore the need for in-business support around Treasury falls away, and Treasury can then focus on the strategic elements of what they're there to do for their business, whether that be managing straightforwardly cash or be managing things that are much more akin to maybe some foreign currency risk.
Yeah, okay. I see what you're talking about there, the shifting the whole connectivity front. Are there other technical issues that exist too? I know the other day we spoke about APIs and closed APIs, open APIs, and what's changing in the broader market. Is that more an issue of someone else looks after something, or is it an issue of what type of tech platform you're sitting on? What are you seeing there?
Certainly from the point of view of legacy Treasury software, as people may have their own installed or house-built solutions, then certainly with the banks moving in the direction of a common API protocol, with the SAPs, the Oracles, the Workdays of the world, again, moving in a similar way, having a solution that can seamlessly interact using these new standards, these open ways in which connectivity can occur, managing that is extremely difficult with legacy software. Hence, again, why we're seeing in a common way people wanting to move to a platform that allows them this seamlessness, allows them this real-time movement of data, and then again, they're in a much better position to make a timely informed decision as to what they need to do in relation to their underlying Treasury business.
Yeah. Now, Steve, let's shift to technology broadly, and not just focused on this particular industry vertical or these industry verticals. But what are some of the common themes or elements that you see people are looking for with their software solutions across Treasury, not solely with Treasury management systems? You said a few things earlier, so I'm not asking you to repeat those. I mean, I know you talked about the SaaS focus for development, quick turnaround, continually being developed. But I wanted to see if there was a couple other themes or elements that could add and enrich the conversation.
When we are typically approached by businesses, there's a whole variety of things that they seek. But I think most definitely the common things, and you talked about SaaS, so that's just a given nowadays that SaaS is an expectation that the good majority of people have. The other common thing that comes up regularly is the fact that people are looking to have as much capability, functionality, and control as they possibly can within a single solution. If that's not available to them, then they want to understand the nuance. That means that they maybe need to look at one or two solutions that can be combined straightforwardly to offer them a best-of-breed Treasury. But clearly, the ability to streamline, to be more efficient, and then, as we said earlier, to focus on the strategy of their organization and their Treasury business means that having something which is more straightforwardly managed, supported, and has as much capability and robustness in a single solution is definitely certainly vital from what the market is looking for today.
Yeah, and are you seeing people seek any changes in processes or an interrelation between processes and technology that's worth noting?
In this day and age, everyone is looking to make things more consistent. When we come across organisations that may have some legacy platforms, and this is any type of business that you come across, whether they're using something very simplistic or something very complex, even from the point of view of an Excel and software combination, what you normally come across is lots of people doing lots of different things, lots of people doing lots of similar things, but having to repeat them because of the different platforms that they have. And in between those platforms, having an inconsistency to how they manage certain things. So what's becoming more and more prevalent is having a consistent workflow, having a consistent process of how they manage things from A to Z. A good example of that is payments. I may have a number of platforms that are actually controlling payment workflow within my business, but they all have their own different control points. But as an organisation, I have a defined way in which my board are expecting me to manage and take responsibility for what leaves the company. And therefore, as a treasurer, I'm going to need some consistency to ensure that every single payment that leaves my building goes through a similar workflow, goes through the same check, and ensures that everything that leaves my business has gone through as much rigor as it possibly can to ensure that I'm getting the end-to-end view and that I can then follow that payment right through to its recipient without any issue whatsoever. Coupled to just the overall payment approach is there's a real drive now within businesses, both domestically and internationally, to look at more of a payment hub approach. And a payment hub can mean different things to different people. But in this guise, it's the ability to have a central place where, again, all payments, whether they be Treasury related, whether they be AP related, whether they be FP&A related, are going through the same definitive demanded payment process, again, to mitigate any concerns around the subjects, for example, of fraud that we talked about earlier. And through the connectivity options that are now available, this is where APIs bring a huge value, because in having this consistency of process and workflow, you can then have a consistency of what goes out and how it goes out in the format that it leaves the building and goes to the bank, and then can be straightforwardly processed at the bank side of things.
I like that. When you were talking about consistency and then payments, I immediately thought of most organizations have a significant level of complexity in the design. A multinational organization acquires firms and they have 3 or 4, maybe 5 or 6 ERPs or systems that generate payments just from where they are in the acquisition world, and they have to solve, like you said, payment fraud concerns or sanction screening, and then they have to do it on 3, 4, 5, or 6 platforms. Insurance companies might have 15 different admin systems paying different types of claims or moving funds, and we have to put something in there. They're putting it in 15 different platforms. So I like how you brought the consistency up with a payment hub, centralizing and simplifying that. That's a good point. I want to shift from the tech. We've been heavy on tech and systems for a bit. I wanted to talk about data for a few minutes, and data accessibility. I'll use this phrase. Everyone has said for decades now is cash is king, right? Cash may always be king, but data is certainly important. Maybe it's part of royalty if we're using the king theme there. But it's definitely really important. But what's changing with data, and how should people think about data as you've looked at this, whether it's from the fin services, insurance perspective, or just broadly, because you talk to many, many companies. You've been in this space for a long time. What's changing, and how should we think about it?
Well, what's never going to go away and has always been prevalent is that everyone's got shed loads of data. Those packets of data or buckets of data can exist in many different forms and in many different places. It used to be that people just anticipated a platform being provided with a series of canned reports that they could run at their leisure, and that contained a certain set of information. And if you wanted anything more than that, then you either had to take the data elsewhere, or you had your vendor define a custom report for you, which allowed you to get what you needed. But that meant that really you were then coming up with your own intensive library, which really didn't then migrate should you change platform or change version. Then we moved into the realms of self-service reporting. Self-service then was more user-driven. You have a series of scanned reports. You have some accessibility to underlying data. And if you're someone that was with the mindset of a report writer, that you could then go off and gather some self-built reports and actually be more standalone in doing that. What we're seeing now is more of a drive to not only look at the data that sits within your Treasury platform, but then to potentially amalgamate it with data that sits outside of the defined Treasury platform and other aspects of business within your organization that are going to impact Treasury. And that really comes back to a couple of things. One is self-discovery. What do I have? What do I need? And how do I get it? And then what tools are available to me? So one thing that we're commonly seeing is the need for people to cross-reference data and bring it into more of a business intelligence perspective. And what do we mean by BI? Business intelligence can mean many things if it's related to payments, if it's related to cash flow, it's related to just user accessibility and audit. So business intelligence may allow, for example, an insurance company to actually look back at historic flows around their insurance premiums and then to use that as a base model to say, okay, in the last 3 years, our auto insurance premiums have been X, or we're anticipating adding new business next year, but at the same time, we're also going to increase our premiums by a certain percentage. So it's the ability to take more of just what typically may have been just seen as two flat models and actually bring those together and give you a combination so that it becomes more intelligent for the business.
Yeah, excellent. That's a good history of data, right? Standard reports or transaction, monitoring operational things to discovery, analysis, how these impact risk, exposures, forecast. Now, you mentioned BI. Would you like to give a definition between BI and AI? Help us to understand some of those differences, because some of what you can get into is artificial intelligence as you're looking at data. So how would you compare or contrast those two terms?
Yeah, it's a good point, because obviously we all know that people love to bandy around different terminology. But certainly from what we're seeing from the Treasury community and their expectations is that from a business intelligence perspective, the anticipation is that you're able to take data that exists, whether it be in a single solution or multiple solutions, and bring that together to give you the ability to then flex it. So if you like, get your hands dirty in the data and then say, okay, well, what's happening here? Is this impacting this? Can I slice and dice it across different business streams that I have in my organization? And then use it to then, for example, identify trends. It may be trends related, as I said, to that premium flow a moment ago. If we then consider artificial intelligence, that's taking, to a degree, the data from the business intelligence, but then having the computer program and software identify things such as anomalies. And it may be, for example, Craig Jeffery has made 10 payments this week of $5 million to company X, and all of a sudden there's an 11th payment going out to that company with a slightly different name attached to it for $50 million. And it's having the ability from a software perspective to rapidly identify that, maybe move it to a review situation, and then obviously ensure that the business is being protected day to day, not only from what's occurring at the coalface, but what's occurring at a very high level within the organisation.
I like that, the anomalies versus getting your hands dirty and detecting trends. That's quite interesting. And when you said the payments, on my online banking platform, I was making another payment to the card that's associated with that, and I clicked it and it said, "Did you mean to make this?" There was another payment for the same amount 2 days ago, and I was like, okay, it's trying to protect me from myself. Very interesting to see how that's deployed in other areas, personal banking, not just Treasury. But thanks for that. But now, Steve, as we move to final thoughts, or as we move to towards the end of this episode, we did cover a lot of ground on the industry, the particular industry verticals. We're talking about technology generally, technology in those areas. We looked at data accessibility. I'd really look for your final thoughts on two things. I just have a couple of questions. I'll say them both. I can repeat them as well. One is, what are the top few takeaways that those who aren't necessarily in insurance or fin services, what are the takeaways that they can put to use? Top two there. And then What do you see causing or driving the biggest change in Treasury in the next 2 years? And it could be tech or it might not. But first is takeaways for those in any industries that they can put to use.
Yeah, I think the top two takeaways, certainly from the perspective of risk management and protection of the business, really comes back around firstly to payments and fraud control. As I said earlier, it may be that certain businesses have very high volumes, but many other businesses have smaller volumes, but those smaller volumes may actually be larger from the point of view of the actual cash flow. So I think fraud mitigation is definitely one of the key benefits that every industry can take for what's really occurring in the Treasury software space today. I think the second thing to consider really to ensure that the Treasury is much more savvy to ensure they can support their overarching business is the ability to really take data and utilize it as they see fit. As I said, historically, it was just a standard report out of a standard box that required a lot of work to actually get it to look any different. Nowadays, the anticipation and what's available is the fact that you can take data, you can manipulate it within your platform, and it can give you a lot more information than you would have had readily available to you just a couple of years ago now.
Big changes there. Okay, so what do you see causing or driving the biggest change in Treasury in the next 2-year horizon or time domain?
I think there's a couple of things that are causing and driving change in Treasury. One that's causing and promoting change from what we hear from our customers and our advisory board is the fact that they want to have more of an autonomous platform that's providing them a lot more intelligence around, for example, artificial intelligence, so that they are then strategically focused on what they need to do, and the platform itself is then monitoring the underlying cash flows, the underlying process flows, and, for example, the underlying payments that are occurring, and then picking out and moving up for review anything that's falling outside of the norm of that Treasury business. Coupled to that need for autonomous views, I think the other thing that we're seeing more and more is the expansion of standard connectivity protocols. The flavor at the moment is around APIs. The banks are promoting those. The banks are adopting those. Historically, banks weren't always that ready to get onto common protocols themselves, but they see this as vital now, not only from their customers and the demands they have from them, but the other platforms that the banks may interact with. And I think we're going to see an expansion of that connectivity realm. It may not be called API next year, but certainly it'll be building on what's available to us today.
Well done, Steve. Thank you for taking the time on this episode of the Treasury Update podcast.
Thank you, Craig. Appreciate your time.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.